Hello everyone, welcome to CFI Education. And in this video, we are going to talk about how can we build sensitivity analysis in MS Excel. So I have a simple case, a very simple income statement. So let me walk you through the data first. So the revenue for the company is 2 CR. The cost of goods sold, which is a direct expense, is 1 CR. Gross profit is 1. Then we have a rent expense as 12 lakhs. Salary expenses is 15 lakhs, and then we have an operating profit of 73 lakhs. Further, we have a tax liability of 21 lakh 90,000, and then we have a bottom line which is net profit of 51 lakh 10,000. So, we have built these revenues with some input data that we had, which is, if I talk about revenue, this year we sold 500 laptops at a price of 40,000, and cost of each laptop was 20,000, and there was some rent and salary expenses, and finally the tax expenses that we had. So with the help of this data, we have calculated all the numbers here and build a simple income statement for you. Now we will be using important tool, sensitivity analysis, to understand what can happen to our profit if some of the input data gets changed. Let's say the number of units sold gets increased or decreased, or the price increases or decreases. Depending upon that, how will our bottom line have an impact? So let me do some formatting first, so that it's easy for you to visualize. Right. And so I will select the net income, which I want to analyze, and put some sensitivity to it, like changing the input data. So this is my profit, which I want to analyze, and I will put the prices, the possible prices that I can have in future. So the base price is 40,000. So I'll put 40,000 here, then 45,000. What if the price increases to 45,000 or 50,000? And what will happen if the price decrease to 35 or 30,000? Units sold is 500 currently. What if we are able to sell 750 units or 1,000 units? And if the units sold decreases to, say, 250, or we can say 400 or 300. I'll put this as 600 and 700. Right. So we have filled in the data, the price and the unit sold, and I have linked this number from net profit. Make sure that you have all the linking this way, that for calculation of revenue, you have done units sold into price, and then for cost of goods sold, you have just done all the linking, possible linking. There should not be any hard punch number. Otherwise, the sensitivity will not work. Now I've just selected this portion. I'll go to data. What if analysis? I'll select data table. Now it is asking me for a row input cell. So for that, I will just select the price, which is this, because we have it as in row input cell. Then for the column input cell, we'll select the unit sold, which is this number. I'll say OK. And now I have got all the possible net profit that I can have if I change my unit sold and the price. So you can see, for a base case, which is 40,000 units sold, we have done, and 40,000 price we have, and 500 units sold we have done. And in that case, we got a net profit of 51 lakh 10,000. And the same number is coming here. And you can analyze that what will happen to my profit if the price increases from 40 to 50 or price decreases from 40 to 30. The same way, if the unit sold increases from 500 to 700 or it decreases from 500 to 300. And that way you can go right side, like the price increase will have a positive impact on your profit and price decrease will have a negative impact. Same way, the unit sold will have a positive impact, and if you go upwards, the unit sold will have negative impact.